The Taiwanese index is down 3% right now. The Hang Seng is down 1.7%, and that's the case across the Asian markets.
Prime Minister Modi has visited the state 8 times in the run-up to the elections.
The company is guiding for a 1 to 3% revenue growth in FY25.
Support basically, to my mind, now comes in at the March low. Forget about 21,970. That was the first number. I thought we'll get some support, but I think you're looking at 21,700.
The FI is short positioning. Well, in the past, we have seen them go to around 1 lakh contracts odd. And normally, we have seen in the past that we do see a bit of a bounce.
Let's start with Rajasthan, a crucial battleground for the BJP because they had done very well here. They'd almost swept the state.
21,800 is where we are at on the Nifty. So 21,830 to be precise.
A lot of these cost increases are also getting neutralized by some reductions, gentle reductions.
Abhimanyu is now joining in from Uttar Pradesh, which of course is, perhaps the single most important state, electorally speaking.
And markets are under pressure for the 5th consecutive day in a row.
Recovery, that is the theme that we are tracking right now, massively from the lows. Nifty, Bank Nifty, all of them in the green.
It's a very, very different looking screen as compared to what we've had in the morning, and it's good. It's all good. 100 plus points in the Nifty is what we have. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema Surabhi here. Nigel is joining in from the newsroom floor. Guys, hi. Good afternoon.
Hi, good afternoon. It's a 350-point recovery on the Nifty from the day's low. And Europe, by the way, is still in the red. It's not a global recovery. Benchmark European indices are down 1%. So a bit of a Friday feeling, at least for the large caps.
I just want to say it's all about the green shoots of recovery. You see Reema's dress code, Nigel's tie, green shoots of recovery after 4 days of fall. And I guess we're a good-looking screen compared to some of the other global markets that Reema was talking about.
Well, that's right. We got 60 minutes to go, but I think for the time being, at least that 1 lakh short contracts is proved right again. We've seen it numerous times in the last 1 year. You see the FI is 1 lakh net short, try to buy the index, and today it was a gap down, so it actually worked more in favor of the bull. So good to see. We're trading well in the green. Let's see how the final 60 minutes pans out, because I think that 20 DMA is still a crucial mark that the bulls would like to take out on the upside.
Absolutely. And, this is the screen we should have had yesterday, and this is the screen we should have had today, and this is the screen we have finally. We were saying yesterday as well, and we got the bounce, by the way, that the market had was due for a bounce. We got the bounce, and then suddenly at 1:30 yesterday, you had that massive sell-off, right? Today, of course, this morning, one sort of came into what we came into, which is a flare-up once again in the Middle East, big sell-off once again. Look at that. Look at where we are now. So just a couple of points I want to put on the table before we go any further. I think the markets maybe 2 days more a close is required, but maybe we've completed something. And let me tell you why I think so. So, by the way, the Nifty is up 400 points, nearly 400 points from the day's low. The Bank Nifty is, and by the way, the Nifty, as of today's close, tested the March low, which is 21,170. The low today is 21,177. So, we are pretty much there. We pretty much got to the lows of March, which basically means, the reason I'm saying we've perhaps completed something, we had a 1,000-point up move from the lows of March to the highs in April. The high in April was on the 10th of April, 22,775. It was a clean 1,000-point up move. And as of today's low, you basically retrace the full 1,000 points from the highs of 10th of April to the low that we had today. And now you got to flip the picture around and look at what the market can do. I mean, if you believe, and I do think maybe we've completed something, at least in the near term, short term, you look at targets, right? Instead of looking at retracement of the rise, you look at retracements of the fall, the 1,000-point fall that we've had, and that will give you some targets. So the 50% retracement of this 1,000-point down move that we've had is 22,276. I think that's about 150 odd points away from where we are right now. That's the first level, which I think the Nifty should get to before it does anything else. Let's see. The Nifty Bank is up nearly 1,000 points from the day's low. That never really, of course, the Bank Nifty never really rallied like the Nifty. And of course, the fall has also been, in that sense, a little lesser. But targets for the Nifty Bank, again, the retracement of the fall, the 61.8 is 48,110. So again, That's what, 600 odd points, 650 odd points, 1.5%, 2%, and you're there for the Nifty Bank. These are immediate targets, which perhaps should also act as a bit of resistance. And Rima was talking about oil, global markets, right? Asia, etc. But look at oil, and the single most important way in which all this sort of geopolitical volatility, etc., feeds through into asset prices, especially for a market like India, is oil. Oil rallied 4%. It's completely flatlined now. We closed last night at 87, made a high of 91, and we're back at about 87.4. So that's a pretty important thing. And of course, rest assured, Middle East developments, etc., will need to be watched. But let me add that unless and until it's a complete big flare out, right? The impact of subsequent headlines, the marginal impact of headlines on the same topic on the market, it keeps reducing. There's a diminishing effect in that sense. So it's got to be kind of a full-blown thing, which one hopes, fingers crossed, nothing of that sort happens. But this is still going to be watched over the weekend. I mean, weekends seem to be when all of the action seems to have happened over the last 3 or 4 weeks now, and we are headed into one right now as well. Rima.
Well, some more stocks. So HDFC Bank is going into its earnings tomorrow very strong. It's at the day's high with a 2% rally. So HDFC Bank is a big pillar of support for today. Infosys is another stock. It started trade lower by close to about, I think, 2.5%, 3%, but now is back in the green. And Wipro too has seen buying ahead of its numbers, which should come out between 3:30 and 4. And Wipro now is up close to about, I think, nearly a 2% gain now on Wipro. So Wipro is also fairly active. The Bajaj Auto, by the way, is still sulking. So Bajaj Auto has trimmed its losses, but down 1.5%. The mid-cap index is down about 0.5%, Surbi, but the small-cap index is managing to hold up in the green. So even on the, in the broader market, despite seeing that red color 0.5% low on the mid-cap space, the advanced decline ratio is 1:1. So that's not, much worse.
Yeah, absolutely. I mean, it's improved because the mid-cap index at one point in time was, nursing a fall of near about 1% thereabouts. Now it's looking better. And actually, you have some, movers and shakers on the screen. Motilal Oswal. I mean, some examples there. Escorts, Kubota. These are stocks that are popping up. Chalet Hotels is having a good session today. So lots of names which are up and about. By the way, in terms of continued reactions on either good Q4 earnings or business outlook sort of notes that have come in, Just Dial is still putting on more momentum, 4% up this afternoon on Just Dial. That's one to watch out for. Indus Towers is again up another 2.5%. So that's an interesting mover as well. On the flip side, there is Tata Communications, which has fallen 5%. So that market's still digesting the disappointment of Q4 on that one particular stock. But on the Nifty, don't lose sight of what's happening to the Bajaj, BFSI twins, Finance and Finserv. Very, very sharp move on Bajaj Finance right now. 3.5%. That one's absolutely tearing away. Yeah, there we go. Bajaj Finance and even Finserv. And then the reaction on Infosys, absolutely confounding, very contrary to the numbers and the commentary and the miss, and we've spoken about that in great detail. But right now the stock's doing well. Perhaps it's fallen a lot. Maybe that's the reason. But yeah, Infosys helping the index as it notches up on the green side now. Nigel.
Well, I guess, Surbi, what was different from yesterday and today?
I'm back.
I'm back.
Oh, great, yes.
But good to see the markets trading well in the green, and if you want to really look at, the breadth of the market, that's the most encouraging picture. I recall when Prashant, started with market opening, we had 200 stocks that were advancing. Now we have more number of stocks that are advancing in comparison to the number of stocks that are declining. So that crisscross line, that'll tell you the picture. Beautiful moving looking screen out there. Just take a look at the spike we've seen in the number of stocks advancing. Right up there, just overtaking the number of stocks declining. Question is, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, well, it's that sort of a day when you needed to be daring enough, go ahead and buy the dip. But you're not out of the woods because that 20-day MA and higher resistance levels have not yet been taken out. Your take, how would you trade the index now?
Good afternoon, Nigel. I still would suggest that, that is all in the hindsight. When the market has gone up, we can say it is the kind of day you should have bought at lower levels, but very difficult to, judge it out. Honestly, the statistical data of put call ratio was suggesting that, the markets were oversold and due for a bounce back. So we were very, I would say we were keeping our stop loss very tight on the short side as well. And, we could exit early. But buying was something, which I wouldn't have done, given the fact that the indices were not, showing signs of strength till about afternoon time. So maybe, in hindsight, as I said, I think it's easy to do that, but difficult to do it in real time, very, very difficult. So again, from a trading point of view, it's okay if you've been able to buy, very good. I think, 250 is the upper end of the range. Maybe we'll go till there. I'm still not sure of a reversal as yet. So that still believes that, I still believe that this could be a market which maybe has found a feet around 21,800, but still will need to do some consolidation to, will need to go through some base building to suggest that this correction is over. So 21,800 to about 21,250 is my range. So buying right now may not be a good idea. But stocks, yes, we have explored long as well. Repco Home is one of the names which is on my list today. That's given a fresh breakout into all-time highs. Keep a stop below 485. Look for targets of around 550, 560 over here to begin with. And eventually, maybe we can look at even 585 being tested there. So, quite a positive pattern. The other one is Bajaj Finance. Very strong reversal candlestick over here. So, would recommend a buy here with a stop below 70.60 for targets of 72.50.
Mitesh, just one question. Do you think we have kind of completed something with this full retracement or not yet?
Prashant, I would not yet,
Yeah.
I get your point. See, I'm still not sure of this because of two reasons. One, we had a weekly gap down on Monday, which still remains. So I think that hasn't been taken out. That is still at a much higher level of 22,450. Secondly, I think the weekly indicators and the daily indicators are still negative. So while we have had a very good bounce back, I think it looks like more of an option and impending April expiry kind of related thing. But once it starts getting past 22,250, then I would at least be bearish, and then we'll see. We might be in a wait and watch mode because this is very, very volatile to understand which direction we are heading towards. But a good reversal will happen only once that Monday gap is filled. So I think it might be choppy till then. It might be range bound, but at least today's low gives us a marker that around 22,800 there's good support. Sorry, 21,800.
Okay, 21,800 is a good support level. Sudeep Bandopadhyay, Group Chairman at IndiTrade Capital, is now with us on the show. Sudeep, morning. What an incredible reversal in the markets. 22,150, and so many pillars are fighting for the markets. ITC, Titan, HDFC Bank, auto names, M&M, Maruti Suzuki, even the other financial stocks like a Bajaj Finserv, Finance, IT has come back into the party. But for the last 4 trading sessions, markets were correcting. Today, of course, it's bounced back. So in the last 1 week, were there any stocks, any opportunities that you spotted which you acquired or bought or recommended to your investors?
Well, Rima, I've been recommending buy into Larsen & Toubro. It hasn't yet started going up, but I think from a long-term perspective, it is an excellent buy at current level. And I think this correction was a great opportunity to accumulate L&T. The opportunity still exists to my mind. And, we are looking at a 4,500 kind of a level in about a year's time, definitely. There is a significant tailwind behind Larsen. We know what's happening in India in terms of construction, infrastructure. The similar thing is happening in Saudi Arabia, where Larsen is a big player. And 1/3 of the order book is international. The margin profile of the company is changing, and there are significant improvement in the margin of the consolidated Larsen & Toubro going forward. And of course, the working capital management and things like that have improved significantly with their exit from unrelated businesses. So I think we are very, very positive on Larsen.
L&T is one. Got that. Sudeep, hi, good afternoon. I want to get your views on actually both the giants. Let's talk about TCS and Infosys. I mean, TCS has still given us some sort of hope. At least the numbers are kind of in sync or slightly above estimates. But Infosys, bleak here, nothing, great in terms of outlook. Yet the market is not being too hard on Infi right now. Is it because you think the stock has valuation comfort? I mean, how would you look at the two? And would you make any fresh purchases on large cap IT now?
Surbi, I will just take a minute and talk about TCS numbers. I think if you see TCS, we all were happy. They did beat market expectations. There were 2 factors which one should notice in TCS result. One is BFSI, second is North America. I think both these underperformed. And one has to remember that TCS have diversified effectively in other geographies and other verticals, which provided them the cushion, and they could still beat the expectations on multiple fronts, including margin. Now, as far as Infosys is concerned, I think they are still to a great extent, have a higher weightage towards BFSI as well as North America, and that clearly shows in their results. I think the recovery in North America business and BFSI business will be the determinant of Infosys recovery, and of course also TCS and other large Indian IT companies going forward, because North America plays a very important role as far as their billing and business is concerned. As far as Infosys moving up today, I think you're absolutely right. It's a valuation comfort. I think the saying in the market is it can't go below this. I mean, it has seen the worst. So if somebody has a slightly longer term horizon, might as well start accumulating Infosys from now.
Okay, let's talk about life insurance, right? The numbers came through earlier. Waiting for the March numbers. HDFC Life, of course, reported numbers, the reported numbers for the quarter, but for most other insurers who have not reported, these numbers are important in that sense. So Yash is here with details of what companies have done. Yash, over to you.
Well, Prashant, I'll start with some important takeaways when it comes to the monthly numbers. Now, this time around, except for HDFC Life, all life insurance companies have grown in the month of March as well as in the fourth quarter. SBI Life and LIC are the strongest growing companies in the month of March and the fourth quarter. Max and SBI Life are the strongest growing companies when it comes to the full financial year FY24. Now, life insurance industry has grown at its premium at about 16%, but private life insurance companies have only been able to grow their premium at just about 2%. HDFC Life has already reported the numbers. The numbers looked weak. So I'll skip HDFC Life. I'll start with ICICI Prudential Life Insurance. March premium grew by 13%. Fourth quarter premium grew by 16%. March total APE, that grew by 9%. Retail APE was almost flat, but the fourth quarter total APE, that grew by 33%. And fourth quarter retail APE, that grew by 12%. Max Life Insurance, the month of March was a little weak, but overall the year has been good for the company. March premium grew at just about 3%. Quarter 4 premium grew at 22%. March total APE was down 9%. March retail APE was down 8%. But quarter 4 total and retail APE, that grew by a strong 10%. SBI Life Insurance Company has been the strongest performing company in March, in fourth quarter as well as FY24. March premium growing at 25%, Q4 premium growing at 52%, March total APE seeing a growth of 2%, Q4 total APE growing at 9%, and Q4 retail APE growing at 16% again. LIC, again, a very strong year for that life insurance giant. March premium for LIC grew at 16%. FY24 premium grew at just about 2%. March total APE grew at 2%. March retail APE was down 16%. For quarter 4, when one looks at the APE figure, total APE for LIC grew by 18%.
So what is this one standout, Yash?
One standout, if I have to pick, it has to be SBI Life. I mean, throughout the year, as I said, in the month of March, strong month. Fourth quarter, if you look at strong numbers, both on premium as well as APE side. And for the year as well, the numbers look pretty strong. So SBI Life for FY24 has to be the best performing according to me.
Okay, Yash, thanks for that. So let me take it straight to Sudeep. Sudeep, thoughts? SBI Life?
It's been one of my favorites, Prashant, for a very long time. And I have been talking about it to investors and in your channel as well. I think this is a great company to buy. I mean, look at the one single advantage. They have the SBI network to source policies for them, and that's being used very successfully, I must say. Apart from that, they have other channels as well, all the other channels. And the retail channel also has been performing very well. I think this is one company which definitely will fight for industry leadership in maybe 5 to 10 years. And I'm including probably LIC as well. I think that's the way the company is developing. But beyond SBI Life, I think overall life insurance is a long-term business and one must understand that. So if somebody is willing to invest in this sector, I think it's a great sector to invest in. Insurance penetration, life is abysmally low in India and is going to go up absolutely without any doubt. So year on year, I think industry will continue to grow rapidly, and the better players, better organized players will reap the benefits. SBI Life definitely is one of them, but we should not ignore Max Life or even an ICICI Prudential as well. They are also performing well. HDFC Life this quarter, this year may not be good, but post Exide Life merger, I think they also will be complete, merger, complete assimilation. They will also come back and deliver strong numbers. So all the listed, players, I think, will continue to do well.
Okay, hi Sudeep, good afternoon. Sudeep, I wanted to ask you about the pharma bets. Some of those pharma names have done very, very well in this year so far. Lupin could be case in point as well. It's done an outperformance, whether you look at it year to date on the last 1 year or so. Today, the stock is down close to around 3%. What's your view on Lupin, or from the pharma pack, what else do you like?
Well, I think, Lupin has been in the dumps for a very, very long time, and they're trying to come out of that. But I think, Nigel, my view is the pricing pressure in US as far as generics are concerned hasn't gone away. And that is one single thing which is bugging most of the Indian large pharma companies. There are blips here and there are green shoots here and there, like Lupin is having now, Sun Pharma is having, Dr. Reddy's are having. But I think it's better to focus on pharma companies having significant business in India and other geographies, not US, at this juncture, till the time the pricing issues, pricing pressure is resolved as far as US is concerned. Under the circumstances, I definitely like Mankind Pharma, which has got close to about 97, 98% of its business in India. I also like some of these like Torrent, Natco. I think these are the companies one should look at this stage. I'm not saying there's a problem in Lupin or let's say Sun or Dr. Reddy's, but better to buy domestic focused or pharma companies focused on non-US geographies.
Sudeep, thank you very much for joining in. Enjoy your weekend too. We will slip into a very short break. On the other side, we'll continue tracking the markets for you. We'll invite Mithun Aswath, Managing Partner, Kiva Advisors, on the other side. Markets are recovering, but Bajaj Auto is still under pressure. The top Nifty loser now with a cut of more than 2%. The numbers look good. So what explains the correction that we're seeing? Sonia joins in. Sonia.
Well, thanks a lot for that. So, on one hand, the stock is down about 2%, but if you remember, the stock has rallied almost 80% in the last 1 year, or a little more than that, in fact. So there is a little bit of profit taking that you're seeing in the stock post what is a very strong set of numbers that the company has reported. If you look at the management commentary as well, the management is very upbeat about the way forward for the business. They talk about how there could be a double-digit volume growth in FY25 if the industry grows at 7 to 8%. So clearly, Bajaj Auto will outperform the industry going forward. They also speak about how FY25 will certainly be a better year than FY24, but the situation on the currency end is a bit fragile. Now, if you look at what brokerages are saying, right, it's a mixed bag. So there are some bulls, there are some bears. On the bullish side, you have JP Morgan and Jefferies. JP Morgan has an overweight with the target raised to 10,000 rupees. Jefferies has a buy with the target raised to 10,500. While on the sell side, you have Citi and CLSA that have target prices on your screen. Now, the earnings for Bajaj Auto were better than street estimates. The margins improved 80 basis points year on year. The margin expansion was driven by a dollar realization, operating leverage, and a favorable product mix on the premiumization end. Many things are working for Bajaj Auto, and hence you've seen this big up move in the stock. Today, you're seeing a little bit of profit taking. Back to you.
Okay, got that. Thank you, Sonia, very much for it. So it's been stock that's been on a tear, literally, and maybe some money coming off the table right now. Let's move on and focus on one more. I mean, this is what I was talking about earlier as well in terms of stocks that are still continuing to see a lot of those earnings reactions play out. And Tata Communications is one that's also under pressure, down about 4.5%. Kotak has maintained a sell call on the stock. Rima, tell us what the issues are.
Well, the numbers came out yesterday, as in the stock reacted yesterday, but the stock has been under pressure for 8 days in a row. So after falling yesterday, I think 2 to 3%, it's seen another follow-on selling pressure of 5%. Kotak lowers the target price, so it's not just a sell call, but the target price has been lowered to 15.25, so a significantly lower than where the stock currently is. One, organic growth for the company moderated. It now stands at just under 5%. The reason is continued headwinds, global slowdown. The order pipeline or the funnel remains strong, but delayed decision making, and it's been tougher to convert those order books into revenues. Margin pressure, as we highlighted yesterday, is the key culprit. Margins for the company are down to 18.5%. Earlier the company had a plan that they want to get back to 23 to 25% margins. Then, as the acquisitions that they did, Kailera, Switch, they were all loss-making or lower margins. The company pushed forward its margin guidance, saying that 23 to 25% we'll achieve in the medium term. But what is medium term? They haven't said. They haven't said whether it's going to be 3 years, 5 years down the line. But Kotak in its note today says that while the management reiterated that they will achieve 23 to 25% and they will double their digital revenues, it is going to be a tall task for the company. So Kotak at least is not very convinced on the performance.
Well, Telecom down 5% from the highs about 4 or 5 days back. It's seen a sharp correction, including, of course, today's fall. Let's focus on a broking company. Actually, it's not a broking company anymore because it's like a financial services entity, but of course with no banking. Motilal Oswal Financial Services is what I'm talking about. Stock is up and up sharply higher, 35% this month. And this year, in 2024, it's up 80%. So what's the play here? What's going on? Vamakshi is here with details. Vamakshi.
Well, absolutely, Prashant. When we look at Motilal Oswal, in fact, the stock has touched a record high in the trading session today. In fact, this strong up move is also being backed by very strong volumes. Volumes are nearly 3 times the average 10-day volume for the company. Like you rightly pointed out, year to date, the stock has gained over 80%. And in fact, since the month of March, it had actually dipped. And from the lows of March, it has actually managed to recover almost 65%. But largely, what's driving this move behind Motilal Oswal, we have a note coming in from MK. It is a recent note that has come through, and in that note the company says that Motilal Oswal has managed to log a nearly 31% CAGR growth in its total client base from FY20 to 9-month FY24, and all this while maintaining a steady market share. Now this is quite positive for the company because in contrast there are several competitors who have been experiencing a decline in active clients. Not only that, the company has noted the highest ARPU in the industry at 28,000 rupees. The AMC business also, MK points out that the operating leverage could drive profit growth amid structural tailwinds. Wealth management, they also see a massive opportunity out here as well. MK highlights that the value value discovery across its business segment, given its re-rating, seen its listed players in comparable segments is playing out. Motilal Oswal's value was going unnoticed, and this was largely on account of its conglomerate structure. And in fact, its moat was not being aptly captured in its share price earlier, is what they had indicated. But largely today, the stock price is being driven by an announcement made by the company. They will be considering their results on April 22nd, but along with that, they will also be considering a bonus issue, and if this does go through, it will be the first bonus issue from the company. So given that, we have Motilal Oswal in focus today.
Thanks a lot, Bamakshi, for joining in and explaining that to us. Well, let's invite our next guest on the show. We have Mithun Ashwath, Managing Partner, Kiva Advisors, who joins us on the show. Hi, Mithun. Good afternoon and good to see you in. Well, Mithun, besides talking about other stock sectors as well as on the index, I wanted a stock idea from you. You normally join us and you give us one. I think the last time we spoke about Greenply Industries. What's the new stock on your radar?
Yeah, good afternoon, Nigel. Unfortunately, we are still, hunting for ideas in this market. There's nothing really new that we've looked at. We've just consolidating with the ideas that we've, talked about earlier. I think one which we continue to be quite, bullish on is InfoEdge India, which is basically runs the Naukri and 99acres platforms, as well as having investments in Zomato as well as TB Fintech. I think in the recent update, there has been an uptick on the employee revenue side as well. On the Naukri side, there's been growth for the first time after several quarters. And I think that bodes well because that is their core business. And if that were to grow, the other additional investments that they have, they're doing very, very well. So I think that is something that we continue to be quite positive on.
Okay, InfoEdge, that is Naukri, right? Which you really like. Mithun, hi, good afternoon. What do you reckon prospects are for the market, though, if you have a firm kind of a view? Do you think we are in for some ranged market here, or will the so-called animal spirits come back and the market becomes a go-go kind of a screen? What's the sense? A little quiet for the next month, 2 months?
I think, Prashant, if you just see even today's trade, in the morning, we thought the Iran and Israel issue is going to blow up. And you saw the markets open 1.5% lower. And as we speak, we've reversed and, all those losses have been, recouped. I think the market is definitely a buy on dip sort of a market. A few weeks back when we were on the channel, the mid and small caps were getting hurt because there was a perception of a euphoria or bubble there. But I think wherever there are opportunities, where there is growth, I think the market catches on to those sectors and spaces. And I think continues to be the same trend, Prashant. I think there are wherever there are opportunities where there is a reasonable secular trend, I think those ideas, whenever there is a correction, one needs to really take advantage of. On the broad market, I think our sense is that the market may rally into the elections, and maybe post the election results, we could see maybe a little bit of a pullback. But I don't see maybe markets correcting too sharply from here. The caveat is being these geopolitical events.
Okay. Mithun, I remember the last time you came, you were telling us how Vedanta looks interesting. But that was about a month back. And I think the stock price was below 300 rupees and now it's closer to 400 rupees. The stock has just rocketed in the last 1 month, up 40%. Did you buy Vedanta or are you still exploring it? Now, what are your thoughts at the current levels?
Yeah, hi, Rima. We did initiate positions for clients around the 260 to 270 levels. That's where, we kind of advised our clients. And, it's been a good surprise. The move has been quick. I think primarily because we've seen commodity prices also move up because of economic data being quite strong in the US and even in China. You've seen a rally across the metal space. And Vedanta kind of, plays across the spectrum of aluminium, zinc, as well as they also have stakes in the Cairn business, which is in oil and gas. So you get a holistic play within Vedanta. I think there's still issues there on the copper side, which they have to sort out. So that also could provide potential upside. And if they were to, sell their steel business to delever the balance sheet, I think that is also expected maybe this quarter or next. So there are some triggers in the horizon.
Okay, so that's a take on Vedanta. Mithun, hi, good afternoon. Great to have you with us today. What's the approach you're taking to financials now, and particularly BFSI, because there's just a lot that's gone on, a lot of regulatory changes, etc. And then we are, perhaps not too far away from a turn of the rate cycle as well. So there are a lot of moving pieces here. What is, what is it you're looking at? Are you adding to positions? If yes, and what side of BFSI?
Yeah, I think, Surabhi, I think the private banks, the large private sector banks, be it the HDFCs and Kotaks, are now reasonably valued in context with the rest of the financials. There was this huge gap in valuations which have corrected. Now you've had, several, maybe a couple of years of underperformance. And these companies, I think, will do reasonably well in an environment where we don't know whether there's going to be rate cuts. Rates may remain stable, according to me, especially if the US economy continues to remain strong. So in an environment such as that, I think the large private sector banks will continue to do reasonably well. The ones that we've continued to hold and have not done so well for us are the Kotaks and HDFCs of the world. To buttress that, we have financials like PB Fintech, which are doing very well because they're on the digital side and they're growing quickly and they've also turned profitable. So this is the kind of way we are playing BFSI at the moment.
Okay, all right, Mithun, we'll leave it there. Pleasure speaking with you. Thanks very much for your time and have a good one into the weekend, and we'll see you back next week. The market's up 140 points, so steady. 22,140 is where we're at. We take a break. We're back. Dealing rooms in focus. Nimesh is going to be helping us with that. D Street chatter. And after that, some more technical trading ideas with Mitesh. Stay tuned.
Welcome back. You're tuned into Closing Bell, and as we've been telling you, the good news is that the Nifty has staged a big recovery from the low point of the day. The Nifty Bank is up close to 900 points from the day's low, and the breadth of the market as well, pretty much even Stevens. A good time to get in Nimesh to tell us what's he picking up on D Street Chatter. Nimesh, what a big recovery. Someone woke up this morning at 7 a.m. and they threw in the towel. They'll be repenting, because the kind of recovery that we're seeing. Tell us what you're picking
sharp
up.
recovery, and again, it's largely on the back of short covering. You also highlighted in the morning that there are so much of shorts in the system. That will be a question, and that's exactly played out. So there's a lot of short covering which is happening in today's market. But again, my sense is the geopolitical risk is still persists, right? So it's not over yet.
Yeah.
So one needs to be a little watchful on that particular front. From a flow perspective, there are large sell flows, again in the large cap names. That's the overall feedback that I'm picking up. While there's going to be a small MOC buy in some select names, but it's going to be very, very selective. But otherwise, there is large sell flow. Even the Nifty bank has recovered 900 points from the lows. But from a flow perspective, all the large private banks are saying large selling pressure. So, again, that's the worrying part, that while we're seeing a short covering rally, the cash-based selling continues from the larger FIs. That's overall feedback. I guess from a technical point of view, we've been highlighting for a while now that 21,800 on the downside is a very, very crucial support. Even today, I guess we just recovered from those levels. So I think that's a level to watch on the downside. But while there is a bit of ease that the geopolitical risk is not there. But I guess, barring short covering, there has not been much support from the larger FIs.
Well, that's right. That 21,700 last month we bounced off that, and today, as you said this morning, 21,800. So that becomes a crucial band that we'll be looking at. What about individual stocks, Nimish? What do you think?
A lot of action in the individual names as well. The first stock on my list today is GMR Power and Infra. That stock today is locked at 5% upper circuit. There are large volumes as well. In fact, there are multiple block deals in today's market. I understand there is a clean out trade from a large FII fund who owns close to 3% stake. And some large family office bought in today's market. So that's the reason why that stock got locked at 5% upper circuit. The second name is TVS Motors. While the entire auto pack seems to be a bit under pressure today, but TVS stands out on large sell flows. Additionally, there was a Citi note in the morning. They've opened a 90-day negative catalyst watch on the stock. And I understand one of the leading long-only funds is an active seller as well in TVS Motor at these levels. The third name is Samudra Motherson. I've been highlighting this for a while now that 121, 122 is a very crucial level on the stock because that's when the last block happened. Today there is an MSE buy flows as well, and all eyes will be on the Tesla tie-up, which potentially can come next week. So that's the reason why we've seen a sharp recovery in Samudra Motherson in today's market. And the last stock is Star Cement. Within the small cement names, this one name stood out for me largely on back of buy flows. So there is buying interest from larger FIs. So expect high delivery volumes in Star Cement today.
Okay, thank you very much for that, Nimesh. Interesting list as always, and even the insight into today's trade. Mitesh is back with us for a few BTST calls for the weekend. Mitesh.
So, I think difficult to take a position because overnight, again, there can be news flow. And in all honesty, I think this is a market which is determined by news flow. So we'll go with slightly safer names. So Bharti Airtel is a BTST. Keep a stop below 1280. Look for targets of around 1310. And if there's good news, maybe more. And the other one which is reversing from extremely oversold levels is Chola Finance. So it's already fallen. So, the risk of decline here may be slightly lower. So BTST here with a stop at 1115 for targets of 1140.
Okay, Bharti is, by the way, up 5.5% this week. Yesterday also it was up when the Vodafone FPO opened. Because if Vodafone Idea has to survive and thrive, we need tariff hikes. So it's going to benefit even a Bharti Airtel, or if there is any government support which comes on AGR, etc., it will benefit Bharti Airtel. So,
I love the way the market always finds a way to bring in the tariff hike, expectation in the narrative.
So
no matter
Bharti
what,
and Indus
we remain very, very optimistic. Tariff hikes will happen. 1 year, 2 year, 3 year wait period.
Well, now it's been 2.5 years.
That's what I'm saying. So, but it'll come. That's what the market believes.
But yeah, so Bharti is up, Indus is up, but Vodafone Idea is down today.
But Rima, speaking of the companies that you track, let's also talk about the next big market event. I mean, that's really Wipro. So it's been like one up, one down from IT so far. Now all eyes on Wipro. There's a management change that's happening. So what's the deal?
So the management has taken over only on 6th April, I think, 5th or 6th of April. So the quarter gone by has been under Thierry Delaporte. Yeah. But since the new management has taken over effective immediately at the press conference and at the interview which we will be conducting with the management, the new CEO, Srinivas Pallia, is going to be there. But quickly to get the numbers in, the company has been reporting negative growth for 4 consecutive quarters, and this will be the 5th consecutive quarter of a revenue decline. So according to our poll, constant currency revenue growth is seen declining by 0.3%. The company gives you a guidance, so this minus 0.3% is within the company's guided band. Margins are seen stable around 16%. The key is going to be their Q1 FY25 guidance. It's seen between 0 to 2%. So the street is going to hope for a positive number coming in this June quarter. Again, in terms of the softer aspects, why did Thierry Delaporte step down before his term came to an end? What's the strategy going to be under Srinivas Pallia? In the last quarter, the company had said there are green shoots in discretionary spending. Any further update on that? Do they maintain that? Because that's not something we've heard from the other managements. Even yesterday, Infi said the discretionary demand environment remains unchanged. But Wipro in January had called out some green shoots there, and they'd also spoken about Capco. Now, Capco is a consulting business that Wipro had acquired for about $1.5 billion under Thierry Delaporte. But they'd acquired it just before this downturn in spending. So, initially Capco did very well post the acquisition, but once discretionary spending started coming down since last year, Capco has been hit, and now you're seeing some signs of recovery in Capco. So that's going to be a crucial engine, a lever for the company, and again on hiring and attrition, because hiring for the company has been coming down.
Okay, so that's Wipro in focus. Stocks, of course, been doing pretty well. But, we'll also hear from some of the first of the mid-cap numbers will come out, Rima. Persistent Systems. So what's the expectation from Persistent?
So Persistent has hit a fresh lifetime high ahead of its numbers. This is the first mid-cap IT company to report numbers. Numbers will be out on Sunday, and this has been a big wealth creator. 1 year return, 50%, 3 year return, it's up 300%. And today, Hormus had done this, the stocks performing best under Modi 2.0 in the last 5 years. And Persistent tops that list with a more than 1,000% return. But the reason why it's done so well is because of the fast growth. In a difficult environment, in the first 9 months, the company's seen a 15% growth. This is on the back of 2 consecutive years of a 35% top line growth. Even this quarter, we're expecting about a 3.5% revenue growth, and margins will be stable but with a positive bias, 14.8%. Now, what's the street going to track? Whether they can continue to maintain that? And again, outlook on discretionary, BFSI, high tech, these are troubled verticals. The company has a very high exposure to them. So how that plays out will be watched closely. But the big boy is going to be HDFC Bank.
Oh, absolutely, and that's the biggie. The results will be out on Saturday, and of course we heard from the bank in terms of the Q4 update, and that looked fairly inspiring, fairly promising. Even if you sort of take away the fact that there's a merge impact that's into play, but even quarter on quarter, from what I remember, the growth in deposits looked fairly strong and healthy. Abhishek has more details. Abhishek, what is the expectation?
Well, as you mentioned, the Q4 update of HDFC Bank with respect to the business update showed strong traction in that deposit momentum. Quarter on quarter, the deposit growth was 7.5%, which is heartening to see at a time when liquidity or deposit growth is a crisis for many banks. Advances growth was at just 1.6% quarter on quarter, and that was because the other wholesale book actually declined on a sequential basis by 2.2%. So the key thing to watch will be the net interest margin. Now, Nomura estimates net interest margin of 3.4%, which is similar to the previous quarter. However, many analysts are pegging a net interest margin decline of anywhere between 5 to 6 basis points on a sequential basis. Now, they have sold stake in Credila. So, will that get accounted in other income? That will be seen closely as well. Analysts estimate slippages of formation of bad loans at about 7,500 crore, which compares to 7,000 crore in the previous quarter. However, asset quality is expected to remain stable. Last quarter, the gross NPA ratio was at 1.26%. Credit costs will remain stable or improve on a sequential basis. Q4 is generally a good quarter for any lender with respect to credit cost. Our poll is on sequential basis we have compared because HDFC Limited got merged last year, so YOY is not comparable. NII growth, we are estimating a 1.4% growth on a sequential basis. We are working with a profit growth of more than 12% sequentially, but remember that analysts have pegged the profit of HDFC Bank from as low as 14,880 crore to as high as 22,075 crore, which actually includes the stake sale that they have done in HDFC Credila. Back to you.
All right, thanks a lot for that, Abhishek. Well, let's welcome Hemang Jani into the show. Hi, Hemang. What do you make of this one? HDFC Bank going into its numbers rock solid, up close around 2.5%. Your take?
Yeah, good afternoon, Nigel. I think the numbers are going to be very strong, both quarter on quarter and YOY. The key takeaway for us will be the fact that the deposit growth is going to be very healthy at about 7%. And the net interest income margins growth will be 26%, and pre-provisioning profit growth will be around 55%. So I think some of the concerns that people had about the deposit growth, I think we should get some more relief there. That is the expectation. The loan growth will be muted, but the point is that after seeing a big underperformance, once we see some delivery, in the numbers, people will have some more conviction on the stock. So we think that from a risk reward perspective, there is be a decent amount of action in terms of upside potential.
Okay, that's the view coming in on HDFC Bank. Hemang, any thoughts on Tata Communications? The stock has been, it's done pretty well. It's still up 50% in the last 1 year. But the updates that we're getting on the earnings front are not very encouraging. Even Q3, there was a margin miss. Again, in Q4, there is a margin miss. Do you track Tata Communication? And is this a buying opportunity, the decline that we've seen from the highs over there?
So, Rima, particularly this quarterly numbers, if you see the growth was very muted, hardly about 1% kind of a growth. EBITDA was down about 7%. And while the management has retained the guidance, about 25% EBITDA, but there is going to be a short-term volatility in the EBITDA that the company can deliver. So while as a space and as some of the categories in which it is present, people do see growth potential because of the quarter-on-quarter volatility in the numbers and guidance. We are seeing a bit of a profit booking. So I think if you see further correction, let's say another 5 to 7%, that will provide a good entry point.
Okay, all right, Hemang, stay on. We'll have more questions for you as we go on. But let's also, get you a market view. These are excerpts from a conversation that we had with Harsha Upadhyay, President and Chief Investment Officer at Kotak Mahindra Asset Management Company. He gave his view on the market and, of course, the themes that he likes at the moment.
We do believe that valuations continue to be the primary risk for the market at this point of time. Along with that, as you rightly mentioned, the Middle East conflict also seems to be escalating. We need to watch that space. And as we have discussed in the past as well, current valuations, it doesn't leave any room for disappointment. So the earnings delivery is really, really crucial for the markets to sustain these levels or go higher from these levels. IT, as we have seen, the results have continued to be weak. The outlook continues to be really, really lackluster. So there are no real defensives in terms of sectors at this point of time. But I think banking could be one where probably the valuation risk is less compared to many other sectors. We have booked some profits in the recent times when there was a up move in the IT sector. So to that extent, maybe it will be slight underweight to benchmark at this point of time. And as you rightly mentioned, the results that we have seen initially have not been inspiring. Even the outlook that has been outlined by management doesn't seem to be inspiring confidence. We are not overweight on banking and financials. We do have some positions there, but it's still an underweight. Most of our overweight is still in some of the domestic cyclicals, such as industrial, cement, automobiles, auto ancillaries, some of these sectors. However, we continue to be positive on two-wheelers within the automobile segment. After a long time, we have seen volume growth sustaining, and also the impact of two-wheeler electric vehicles seems to be not as much as what the market was fearing earlier. The margin profile has also kind of improved.
Welcome back. Well, final few minutes of trade today, but Hemang Jani is still with us. Hemang, I wanted your view on the telecom space. What is your preference out there? Everyone is focusing on Vodafone Idea, but Bharti Airtel give big returns. And, as my colleagues were discussing, that a tariff hike seems pretty much on the cards in the middle of this year. The few reasons would be the last 4-5 years, you haven't had a price increase, a tariff increase. You also could probably have a listing coming in from Jio, so that could be the other reason that the street is working with. What's your take? Preference in the telecom space? Go with the high beta name, or would you rather stick with the larger names?
I think we have plenty of choices, Nigel, when it comes to telecom. I think for those who want to play a bit safe and high allocation stock, Bharti is, I think, best placed to play the tariff hike story. And once we have this idea FPO successfully completed, you will see the ARPU increase 15 to 20% over the next, let's say, 2 years. And I think clearly would be one of the biggest beneficiary. Apart from that, we have seen a massive re-rating for a name like Indus Towers. I think the tenancy ratio will increase to about 1.95. The overhang of the key client idea, the issues which were there in terms of debts, etc. Once that is over, you will see further re-rating. So despite the fact that we've seen such a big re-rating, I think there is another 20% kind of an upside potential that one can really look at when it comes to Indus Towers.
Okay, that's Indus Towers in focus. Still looking at that 140-point gain. So it's been a steady show, at least as far as the market's concerned today. And that recovery in the second half, Just Dial, by the way, 6%. And that rally keeps growing stronger and stronger. This week, the gain on Just Dial is about 18 to 19%. This year, calendar year, Just Dial has done 33%. Stocks really, recovered quite a bit from the slump. Let's pull up a longer chart, a one-year chart if we can, on Just Dial. Last 12 months have been, a period of recovery for the company and for the stock. Let me take this to you, Hemang. It's really come back from the brink, market almost writing it off, weak growth period, etc. But then we've seen that whole recovery play out. And I mean, this last quarter, Q4 looked very good on revenue and on margins. What do you make of it? And of course, the stock valuations, does it merit an entry now?
So clearly, I think the uptick that we have seen is on the back of the stronger performance, more so on the margin front. And, the extent of surprise there was almost about 350 to 400 basis points. Now, we don't cover the stock in detail, but I think a large part of the further upside will be driven by the new initiatives. They have taken initiative like JD Experts, JD Shopping. So once we have clarity in terms of what kind of traction one is seeing on those areas, the stock would get further, action based on that. But since we don't cover it, I don't have a view on it right now.
Okay. By the way, any thoughts on these companies like VA-Tech, Vabag, Ion Exchange? Stocks have had phenomenal moves higher. A little bit of pullback today on both. Hemang.
Yeah, I think, VA-Tech, Vabag, I think is at all-time high. And I think some of these names, maybe because of the fact that we have election and these stocks may have some correlation with that. But we are staying away from some of these companies which typically you see that theme, catching up because of the momentum. But we don't think, there is any great merit in terms of looking at it from a purely valuation and theme perspective.
Do you track Gokuldas exports, Hemang? Price has not done anything. I mean, actually, it has done. It's come off. From the highs of 950, it's down to about 800 rupees. But markets were anticipating that QIP for a long time. Now, of course, we have the news that the QIP is coming, base price, etc. Anything here, Gokuldas?
No, I think quarterly numbers, we are looking at about 16% kind of an operating profit growth. QIP part, we don't have much clarity on. But in terms of the exports, the indications are not looking that great. So not looking like a very compelling story at this point of time.
Okay. Another one is, again, where there has been some fundraise which has happened is Shilpa Medicare, right? Some institutions have gotten in, I think ICICI Pru, SBI and other prominent investors. Happened, I think, a week and a half back. Stock's done well. But I don't know if you have coverage or if you track this one.
No, Prashant, we don't cover Shilpa Medicare, so no real view from my side.
Okay, all right, got
the
it.
other place where we are going to see some capital raise is Axis Bank. Hemang, the board will meet on 24th, that's next week, to consider its numbers, results, plus a fundraise. How would you read this development? Because the stock has corrected a bit.
Yeah, so Axis Bank in the last, let's say, 1 month has corrected much more compared to Bank Nifty and other banking stocks. And I think on the results front, we think that there is going to be about 22% kind of a growth in the pre-provisioning profit, a decent amount of loan growth. So no real issues in terms of numbers. And I think the fundraise part, it remains to be seen what kind of quantum they are looking at. But clearly, in case of financials, once you have a fundraise plus slightly better numbers, and if HDFC Bank numbers are good as the street is expecting, I think it will be good for the entire sector, including names like Axis, ICICI, etc.
Okay, all right, Hemang, we'll leave it on that note for today. Thank you so much for joining in. Great to have you on. You have a good weekend, and we look forward to connecting again next week. Well, the story is a story of recovery, and on the most unlikely of days, when you have geopolitical tensions hitting fever pitch, all kinds of headlines coming, global markets falling, talk of that surge in oil prices, but then some sort of stability has prevailed, and a big recovery is the story of the second half. 140 up on the Nifty as we're heading towards the close. And if we talk about the leadership, really it's financials that have led from the front. Look at HDFC Bank and the kind of last ticks we're getting on that stock. 2.5% up, above the 1500 mark. That's HDFC Bank for you. Bajaj Finance, Bajaj Finserv, ICICI Bank, Axis Bank. These are the other financial names that have done very well today. So solid show coming in over there. And some of the names from the auto space, of course. Maruti, for instance, doing quite well. We also had M&M up about 3%. Of course, on autos, Bajaj Auto was the other story, down 2.5%. Profit taking after a solid show in the fourth quarter, and some brokerages turning cautious as well. For instance, CLSA calling it a sell just because of this huge rally that the stock has seen. But otherwise, a strong show coming through for the large cap space. ITC, Titan, HUL, SBI. These are some of the other main winners of the day, guys.
Motilal Oswal, we were just talking about that one earlier. A big move today. RK Forging, there was an agreement with, of course, the company did not say that it was Tesla, but looks like they signed a long-term agreement with Tesla. And a lot of talk about Tesla, I guess, over the next couple of days with Mr. Musk being here, expected here in India. Bajaj Electricals had a big day. Kaveri Seeds, very sharp move higher today. Repco, I saw an upgrade 2 days back. That was up about 7-8% today. That's a housing finance company, largely in the south of India. Raymond had a very strong day. Lots of names. Force Motors was up. ADF Foods is another one which participated on the upside. So these are some of the big volume-led gains that we had in terms of today's trading session. So that's the price action. So eventful kind of a day, and it leaves us with 150 odd points to show for it in terms of the session. The week, by the way, will be down 1.6% for the Nifty. The Nifty Bank, if I can just take a look at the weekly change, that's down 2%. Yeah, so these are, we're down for the week. The small cap index for the week is down 1.5%. And I think the mid cap index also should be down. Mid cap index is down about almost 3% Friday to Friday. Well, it's a wrap on this edition of Closing Bell. From all of us here, goodbye. Thank you for watching our special Friday offering. Smart Money will pick up on the action in just a bit.